Hey traders, what's up? Jamie Sedley here. It is February 11th, 2017. I want to do a quick follow-up video on the report that was published regarding the British pounds back on January 22nd, titled humorously "Make British Pounds or Make Great British Pounds Great Again." And if you recall, we did look at the FTSE and the relationship between the pound dollar and the FTSE, um, as well as the massive long-term pattern. Remember, there are between every major high and low in the British pound, the lows, they separate by 31 to 33 quarters. And so far, we have the low in 31 quarters from 2009. Okay. So the idea being that basically we're at this huge, massive low, and we're trying to really time it to get the most that we can out of the position or out of the idea. So to do that, we're looking at the FTSE, right? Remember, back on January 22nd, we had the idea that the FTSE would trade to a new high, the British pound would trade to a higher low. Okay, that's actually still the case, taking kind of the scenic route to get there. But let's look at that chart now. So we published back here, right? This was January 22nd, and you can see again taking the scenic route, the relationship is still there, right? As far as FTSE lows, pound highs, FTSE highs, pound lows. So again, one more high up here would make us 5 waves up from at least the election, and maybe even 5 waves up from last year's low, last February. In fact, this FTSE chart might actually be the key to understanding when you're going to get some sort of a market top in, indices globally, generally speaking, right? It's very clean. 1, 2, 3, 4, 5. And we're watching two specific areas on this chart for a high. The upper parallel on the daily here is about 73.90. And if we look at the bigger picture weekly chart, remember the channel that extends 2003 low and then the 2009 low, extend that off the high in 1999. That parallel is up. It's a little higher now because time has passed, so we'll call it, it's a little set like 74.80 at this point. Okay, so that's the area that we're looking at. So we'll have those on, kind of on the radar to help us identify the big, low, and pound. Now, what I want to do as far as looking at the British pound, as you know, we've been looking at some analogs, comparisons with prior lows. Okay, so when I'm looking at a chart, and there have been some folks on Twitter, some that I have a good deal of respect for as traders and analysts that I know are comparing the decline into the lows and the aftermath, into last October's lows and the aftermath to this 2001 period. Okay, I'm not saying that that's wrong by any means, but I'm saying I think there's actually a better match. So when I look at this chart, what sticks out to me as far as the way the market is making a low, if it is indeed making a big low, which I think it is. It's actually kind of a double bottom, right? You can see the two lows here. So sharp drop and then a double bottom. If we look at the low back here, it's not as much of a double bottom as it is more of at the lows exactly. It's kind of a V, right? It's a very sharp V bottom, and it ended up being a Head and Shoulders that took several years, of course, that launched a big move higher. This low back in 93, somewhat of a double bottom, but the lows aren't really that far apart. And again, you don't really go back and test the lows. The one that actually looks most similar is the one that's into 1989, right? The 1989 low, which would be May 89 and August of 89. So what we've done is gone on a daily basis. This is a weekly basis, so we could take this and match it up, but we want to get a little more granular than that. So I'm going to match up that period into the 1989 low, okay, with current price action, and we do get a pretty good match, especially from Brexit onward. okay, you have a very good match. And you can see here, if I zoom in a little more, 5 waves up back in '89. We do have a 5 wave rally in pounds now, really from just after the crash in October, the final capitulation low. The sequence of highs and lows match up extremely well, right? Analogs to me are fractals, or it's about shape, um, but this one has shape and the degree of the moves follow, very closely as far as percent move. So it's not just the shape and the distribution of highs and lows, but it actually follows quite well as far as the actual move in the market. So if this were to continue, we would actually be coming into next week and looking for a fairly sharp drop in next week, which would not be a surprise with what we are actually looking at on the FTSE going to a new high, and the dollar generally at decent support. Okay, so I'll be looking at some shorter term charts, obviously, in the swing updates. Remember, we've just come off the high on Friday, was actually at the monthly opening price in the BOE high volume level in cable. So we actually did just hit a pretty good support anyway. But yeah, it would seem that the next few months in cable, if this were to continue, right, we might be going into a decent kind of range and then prepare for a breakout later this year. It would appear that it would be more like April or May, where you'd start to, get a good move higher after a period of sideways movement, which the sideways movement itself should offer some good opportunities. So anyway, that is what I'm following, trying to put all the pieces together with, again, the FTSE to a new high, but looking for that higher low in cable. And then this 1989 map may help us get there and navigate over the next few weeks. All right, so hope it helps, and look forward to following this in real time in the weeks and months to come. Okay, Jamie Setley here signing off. Take care.